Good afternoon. Good afternoon, everyone. Happy Thursday. How are you doing today? So, today, as I promised, I'm going to continue what I have started yesterday. So, yesterday we spoke about how you pay yourself, an LLC structure, and a partnership. So, if you want to learn how should you pay yourself, because it is different from an entity to another entity, the way you are required to pay yourself, because like we said, you can, in some entities you must pay yourself a salary if you want to take a withdrawal. In other entities you cannot actually put yourself on a payroll. It has to be just a draw. So today we're going to continue and go into S Corps and C Corps. Okay, so hold on 1 second. Okay. So today we're going to be talking about S Corp, and this is the most confusion where people get confused and not sure how to pay themselves. They think they can just take withdrawal. They don't want to put themselves on the payroll because now you have to pay payroll taxes. So much confusion there. So I'm gonna tell you something about this now. Before we start into that, I wanna reiterate what is S Corp. S Corp is a corporation, right? From the name S Corp. But how is it? You do not register S Corp as an S Corp. So you have to be registering your business as either LLC or a C corporation. S Corp is a tax election. So after you register as an LLC or a C Corp, now you make an election and say to the IRS, hey IRS, I want you to tax me as an S Corp. That's basically what S Corp is. And like I said before, it's not wise to start right away. You want to wait and see, do tax planning after a while and see if it does make more sense for you to be an S Corp or not. Now, how do you get paid an S Corp? An S Corp, hey Shane. So an S Corp, you cannot actually draw money from your corporation until you put yourself on a payroll. Because simply what you're saying here, some people can save taxes just by being S Corp because they save and self-employment taxes, but not always. So self-employment taxes, basically it's your payroll taxes because you don't have anyone to withhold your payroll taxes. Now it's your responsibility. That's what happens when you are an LLC and partnership setting. Now, once you are an S Corp, you avoid those self-employment taxes. However, you have to put yourself on a payroll because IRS is not going to wait forever to get the payroll taxes. You need to pay payroll taxes. So that's why you must be on a payroll. Now you have to determine your compensation, and your compensation must be a reasonable compensation. So if you had someone doing your work, how much are you going to pay that person? Based on your company income and everything else, how much that person is going to get paid. That's how much you need to pay yourself. Now if you do that, now you are free to take distributions. So you pay yourself distributions. That is that is payroll tax free. So you don't have to pay payroll tax. It doesn't have to be consistent. It doesn't have to be subject to payroll taxes. So you can just take contribution. But if you do not put yourself on a payroll, you cannot take a distribution. Now I hear you saying that, do I have to put all my partner, if you have partners on an S Corp, on a salary? Not necessarily. If they do not do work on the S Corp, you don't have to put them in the salary. But if you are working and expecting to get consistent compensation for your work, then you have to be on a payroll. All right. So that happens to most of you guys who are just solopreneur registered as an S Corp. Register as an S Corp, you can actually you have to put yourself on a payroll because you are the only one working. Then you are self-employed but on an S Corp. Okay, so that's for the S Corp. Now another thing for the S Corp, hopefully you did your bookkeeping. If you did not do your bookkeeping, feel free to reach out and book a call now so we can help you do your bookkeeping cleanup for 2023. You can book a call at noorasbooks.com/contacts. And you guys on Instagram, you can go to the link in the bio and you can book a call. You can just simply go to my website, noorasbooks.com, nourasbooks.com/contacts, and you'll be able to book a call with me or someone in my team. After that, because you are going to have to submit your tax return for your S Corp by March 15. So almost there. March 15 is the deadline for S Corp return. Got that covered? That is different than your personal return. You're not going to pay taxes or get a return for your S Corp return. Why? Because it is a pass-through entity. So it has its own taxes, but it's informational taxes because that tax return will issue K1 for you and everyone who is a partner on that S Corp. And you guys can include it in your personal return, which is going to do on April 15th. So make sure you do your S Corp return on time. Don't wait until last minute, because if you come to me or any other professional who already have people working with us, of course, if you come in the last minute, we might not be able to do it for you. Well, we might put you on an extension, but remember, if you are put on an extension, that's gonna distract you from focusing on the current year, and that certainly will affect your goal for this year. All right. So this is for S Corp. Let's move on and go to the C Corporation. Now, C Corporation, if you did not elect to be taxed as an S Corp, now you are just a C Corporation. And this is where people say sometimes double taxation. Yeah, sometimes it could be a double taxation. It depends on what you do with it. Now, you can put yourself on a salary or not. So all officers can be put on a salary. You can also take extra money, and that's considered dividends now. Now, if you are put on a salary, you're paying payroll taxes and everything good for the IRS. Now, if you are taking a distribution, you might have to, you know what? I'm not going to confuse you more with this. I'm going to leave this treatment for taxes on how you pay yourself on a C Corporation for a later video. So we can go in depth on the C Corporation and when it's good and not good to be on a C Corporation. Okay, so we're not going to go in depth, but the main thing is you can put yourself and any officers to receive actually compensation. However, C Corporation is its own entity. It's not pass-through entity. It's not, so you have to pay taxes on the corporation level and then on your individual level. So that's why they say it's double taxation. But there is a lot of consideration over there as well. But we're going to leave that into a later video. So this is basically what you have to do on a C Corporation. You can pay yourself salary, you can take dividends. You actually have to file your tax return on April 15. So that's the deadline for the C Corporation, April 15. Why it's not like others, like partnership, S corporation, multi-member LLC. All of these actually due on March 15, but C corporation due on April 15, the same day that you are doing filing your personal taxes, because you're not looking to get K1 from C corporation. It's their its own entity. You pay taxes and receive a refund if that's due to you on the corporation level. You don't have to transfer that into your personal taxes. So that's the difference between each entities. Now, you don't wait until the last minute. And definitely, if you have a C corporation, you have to do tax planning to make sure you are saving in taxes, because it's so complex. You cannot really actually know the best situation unless you do tax planning. So you want to make sure you do tax planning. S corporation, yes, you have to do tax planning in order to elect. I mean, no one's gonna tell you you cannot do that, but it's for your best interest to do tax planning to make sure your tax situation is optimized. We do the service at Nora's Books, and you can feel free to actually book a call and we can onboard you for that. Now, make sure you book your appointment with your tax professional, or if you don't have one or looking to change, feel free to reach out to me and my team, and you can actually, again, book a call at norrisbooks.com/contact. And don't forget to go get my book if you have not yet. It's available on Amazon and on my website. The book name, How to Start, Manage, and Prosper with a Nonprofit. How to Start, Manage, and Prosper with a Nonprofit. It is good for you if you are already in nonprofits, any level of involvement, or if you are looking to get involved with a nonprofit, regardless if you are looking to start one or getting engaged in any capacity with a nonprofit. So make sure you grab that book. It's an easy read. I tell you a little bit of my story and my family, so you get some information about me. Go grab the book and let me know what you think of the book once you get it and read it. All right, don't forget to book the call now, because first come, first serve. If you don't want to wait late, make sure you actually book a call, regardless of you want to like bookkeeping cleanup or tax return only. If you did not file that's issue 1099 or W-2 for your employees and contractors, make sure to do so by January 31st. Don't wait until the last minute. You have to have W-4 and W-9 already filled and from your employees and contractors. So make sure you actually get that done. If you need help with that, please feel free to book a call. We offer this service and I'll be happy to help you doing this. This is actually due on January 31st. So make sure you don't have much time. Make sure you book a call right now. Don't delay. This is your urgent calling, because you don't want to be late and then the penalty. And the good thing is we do that. We do issue by email, so your employees and contractors will receive that 1099s or W-2s via email, so they don't have to wait for it. All right, with that, I will leave you for the day, and happy Thursday again. See you tomorrow. Don't forget to book a call and to go get my book. All right, have a great day. Bye.